Hello, my name is Serafina. Keywords from this podcast are perspective, higher timeframe direction and timeframe correlation. Hey traders, welcome back to the podcast on perspective and timeframe correlation. Today, we're diving into market charts and the question we all ask, what's the trend? Trends feel like they carry the past with them, patterns that hint at what's coming. But let's be real, trends shift, evolve, and sometimes just fade away. So, what if we're asking the wrong thing? Instead of chasing the latest trend, what if we asked, what perspective does this chart give me on my own trading journey? That shift might be the guide we need. Let's start with the big picture. Higher timeframes like weekly, W1, and daily, D1, charts. These are where you find the market's direction. Step back, and the lower timeframe noise smooths out. You see if the market's climbing, dropping, or consolidating. It's like W1 and D1 hand you a map, showing the big picture. But here's the kicker. Is direction enough to trade on, or is it just the first part on your journey? Now, zoom into the 4-hour, H4, and 1-hour, H1, charts. These charts change the game. They're less about direction and more about looking for entries. Imagine price hitting a predetermined H4 level. Refer to Season 3 Episode 8, a level that's held before. That's your cue to actively watch. Good entry signals can be found on lower timeframes. Drop to the H1. Look for a tighter entry signal, maybe a 2 or 3 candle pattern that gives an entry signal of the level. Can you see where this is going? But what happens when you zoom tighter, M30, chart? The more candles used in the entry signal means you might need 5 to 6 candles. It is also important you maintain perspective of the bigger picture. It may also mean you get a tighter stop. Does this help when looking for entries on lower timeframes? These lower time entries should be kept in perspective with the broader W1 or D1 picture. The tighter we focus, the more discipline we need to separate signal from noise. So, let's think about perspective and timeframe correlation. Higher timeframes like W1 and D1 scream direction. H4 and H1 are about entry signals. Ever wonder if half-hour trading flubs come from asking the wrong decision by not keeping the bigger picture in perspective? Here's the deal. Don't lose sight of the big picture. M15 might tempt you with fast moves, but without tying it to higher timeframes, like W1 or D1's context, you're chasing shadows. So, how key is this interplay on your own trading journey? W1 and D1 guide where the market's flowing. H4, H1, they flag when to act. Respect each timeframe's job, and maybe the market's not so cryptic. Ask it the right questions, direction from above, timing from below, and it might speak clearer than you think. Could this perspective and timeframe correlation-driven approach be the edge you need to hear the market story and trade it smart? That's it for today, crew. Stick around, next episode, we're digging deeper. And hey, check the Substack post for some questions to chew on. How do these waypoints fit your journey? Let me know. Catch you on the charts. For a PDF download and 5 questions on perspective and timeframe correlation. For more information, go to ltrfxc/substack.com.